Uh, hey everyone, Anthony here. Sorry for the bad lighting. Sorry that my apartment's a disaster. The regular viewers know that I'm in the process of moving and don't have my lights and cameras set up, and everything's getting taken away. Not getting taken away, getting packed away. So, Joe Biden just proposed a plan to hike up capital gains taxes. I'm just going to read off this Zero Hedge article. I'll put the link in the description. Let me take a note of that so I can remember. I'm going to be trying to get some videos edited and published like soon. I know I said I was taking a couple days off and everything, but I'm still recording videos. I'm just not editing them. But I have like a backlog of videos and everything. All right. So it says the reality of Biden's administration, soak the rich plan is finally hitting markets as the details of his new capital gains tax plan are hitting. As Bloomberg reports, President Joe Biden will propose almost doubling capital gains tax rate for wealthy individuals to 39.6%, which coupled with an existing surtax on investment income means that federal tax rates for investors would be as high as 43.4%, according to people familiar with the proposal. The plan would boost the capital gains tax rate 39.6% for those earning $1 million or more, an increase from the current base rate of 20%, so doubling it. The people said on the condition of anonymity because the plan is not yet public. A 3.8% tax on investment income that funds Obamacare would be kept in place, pushing the tax rate returns on financial assets higher than the top rate on wage and salary income, they said. So investment income would be taxed higher than wage and salary income, labor income. The proposal could reverse a long-standing provision of the tax code that taxes returns on investments lower than on labor. Biden campaigned on equalizing the capital gains and income tax rates for wealthy individuals, saying it's unfair that many of them pay lower rates than middle-class workers. So I wrote this on Twitter explaining how it's not unfair. And what I said was, so basically what's happening here is, well, the reason that it's not unfair is because investing is an extremely risky business, an extremely risky thing to do, because you have to vet these companies that you're investing in to make sure that their businesses actually succeed so that your investment doesn't just go down the drain. You have to make sure that like the CEOs and the CFOs and all the workers and everything are actually capable of doing the job, and that the business idea is actually good, and that there's a market for this business idea. It's extremely risky, and you have to worry about competition. Think about Tesla, for example. Like now there's all this competition from Ford and Chevy and all these other vehicle manufacturers for electric cars, which have been building electric cars for like a century or something like that. So you have to take into account competition and all that. Like investing is a really risky thing, and it's all this investing. Investing is what builds businesses, and laborers get jobs when businesses actually succeed. So laborers benefit from this, and laborers get these services. Like if you invested in Amazon, look, you get shipments of groceries to your door now, and that regular people wouldn't have gotten previously, and Amazon Prime and drone deliveries and all this great stuff that we never had. And this is thankful to investors to Jeff Bezos, who had this idea and followed through with the idea and had the skill set to do it, and these investors that backed him. Amazon created a shit ton of jobs and everything like that. I know people don't like me pointing that out or saying that. People, sorry, there was just a sound on the side of me. People want to go against Amazon and whatever and say that they're evil. But also with independent investment, like the USA GDP grows because there's more businesses and profit and everything like that. There's more infrastructure. and all that. So it's really not unfair. It's an equal exchange of value. Investors get money back on their investment, and society advances. The USA GDP grows. Laborers get jobs and services and stuff that they wouldn't have had. But this isn't what this is about. What this is about is the government taking away money from independent investors, because independent investors have a say in how the economy grows. Like, say that, well, take for example, like Republicans and getting banned from YouTube and Twitter and social media and all that. Well, there's a market need now for a new social media site, so then investors come in and see that market need and build that. So there's independent investment, like it's just free market stuff, and independent investment seeing needs, and needs get filled. Well, when the government taxes all this so high, the government is taking money away from the people, and the government is deciding what gets invested in. So now these social media sites that might get developed with independent investors, well, now they won't get it developed because government money is in control of investment. So the government just wants to be in charge of the future development, and they want to be in charge of the people. And when there's free market, when there's independent investors, they're not in control of that. So that's what I think this is about. Crazy ass world that we live in. Also, this was written into the tax code. Like, I don't know when it was put in, but I looked this up like many months ago. Taxes are ex post facto. So so basically retroactive. If a law gets put into place and you did something before that law was put in place, you're charged with it, even though you did it before that law was in place. So say that, we'll use my real life for example. So when I sold Ethereum to buy a house in February, well, now I'm subjected to these higher taxes, even though this is also just a proposal right now, but I would be, so it's not actually something that is in place, but with the Democrats in control of like everything, it's probably going to get passed. More than likely will get passed. Yeah, so I'm going to be charged, even though I sold before any of this even existed, I'm going to be charged these higher tax rates. It's completely unethical in my mind, like ex post facto things. Like, well, imagine doing something illegal 3 years ago. It wasn't illegal at the time, but 3 years later, the law changed and now it's illegal. And then they go back 3 years and charge everyone that did this illegal thing. Like, say that drinking beer wasn't illegal today, but next week they're like, oh, we're doing prohibition again. We're banning alcohol, and everyone who drank alcohol, it's ex post facto. Everyone that drank alcohol last week is now getting charged for whatever, for breaking the law. Crazy. But there is one more thing that I'd like to mention. So with capital gains tax, you still get taxed the minute that you sell. So I guess it would probably make more sense for everyone to just hold on to their stocks and not use money, not sell their stocks and buy stuff, because they're afraid of getting this high tax rate. It's like it kind of discourages spending, because people are like, well, why would I, like, all my stocks are going up, me holding increases my stocks. For me, investing in Ethereum, like, Ethereum is going to go up, and like, it just encourages me to hold on to my Ethereum more, because I know that Ethereum's going to go up, and paying these tax rates, I have to second guess, well, is it really worth paying 50% or whatever? So New York, for Californians, it could be 56.7%, and New York 52.22% taxes on capital gains. Like, more than half is ridiculous. And that cuts into the bottom line, because now your investment, when you do invest, you have to worry about, well, is my investment is it worth investing? Because I have to take into account the capital gains tax. So now, instead of me putting in $100 and, oh, if taxes is like 10%, well, then anything like over $112, $110 would be profit. Well, now, so I can sell anything if that investment goes up from 100 to 110. But now if tax rates are like 50%, well, now I have to wait for that investment to go up to like over $150 before I sell that investment. So I think it would just encourage people to hold on to their investments longer and to save and not spend money, which I think might end up hurting the economy more, because if wealthy people especially aren't spending money, because wealthy people end up paying more taxes because they make larger purchases. So it might end up hurting the government and hurting the economy and all that stuff. Wealthy people make larger purchases, more expensive purchases, and purchases more often. So that's just like less business for businesses and less money in tax dollars for these whole plans anyway. Take care, guys. Thank you and goodbye.